So, private company valuations in the tech sector are going through an unusual moment. This is the first in a four-part series with Hardman Co's Private Company Valuation Forum, and we're starting with the data. So, we've got Doug Lawson, director at MarktoMarket. He's going to walk us through some of the TMT deal volumes across 2024 and 2025, and what the early 2026 numbers are also showing. So, the picture is much more nuanced than the headlines, but there's definitely a clear story building. And at the end, he introduces a concept that frames everything that follows.
Thank you very much, Hardman, for having me again. We thought that rather than looking at the market as a whole, we'd pick a specific theme. And I think there's a very live theme going on in the market at the moment, which is the SaaSpocalypse, or what has been termed the SaaSpocalypse, which is the impact on tech companies of the large language models. And that's what I'm going to focus on. Before I do that, just to go into a few stats on the market and just look a wee bit further back about, we've now got a good look at what was going on in 2025 versus 2024. So we'll have a little look at that, and then we'll move on to a relatively short time period, but what the data is telling us about 2026 so far. So this is our definition. Different people have different definitions of tech. This is our definition of TMT. The T, the technology bit, technology, media, and telecommunications. The technology bit, our subsectors on the MarktoMarket platform are software, IT services, tech, hardware, fintech, video games, and mobile apps. And it's really within all of this, it's really software that has seen the impact of the large language models and what they can do, and the increasing sophistication of these models. That's where the hit has been so far. So that's really what we'll be focusing on. But just before that, kind of looking back at 2025 versus 2024 and looking at volumes of deals in the TMT sector, actually 2025 was a pretty good year. 2024 was a pretty good year as well. We saw a bit of a decline in tech deals. This is actually deals involving, this is through a UK lens that we're looking at this at the moment. We saw 957 deals in tech involving at least one UK party. These are M&A transactions, not equity raisings. We do look at those separately. Then in media, we saw an uptick to 518 deals, and then telecoms was broadly in line. There's been a bit of a blurring between telecoms and IT services. IT services would be in this tech bit. A lot of firms now that are providing managed services, it kind of spreads over telecoms and broader IT services. And any of those businesses would go into our tech area. So maybe that's why telecoms looks a little lower in terms of volumes than you might expect. So this time, rather than looking at deal values, rather than look at deal volumes, this is deal values. So in tech, we saw, again, this is deals involving at least one UK party, 55 billion of deal values in tech in 2025. That was up from 48 million in 2024. Media was well down, and telecoms was down as well. I think, as you'll imagine, the big dial movers here are the mega transactions. So, for example, in 2024, we had a few sort of £2-3 billion deals in the media sector. So Prequin was one of them. That was 2.7 billion. DAZN was 1.7 billion. In telecoms in 2024, Swisscom bought Vodafone Italy for 6.8 billion. So these are big dial movers. And you always see that in these stats. If there've been a couple of mega transactions, it can really skew the stats one way or the other. This is looking at valuations now. So what we often find very interesting, we track valuations in the private markets. And I think what's always very interesting is looking at valuations in the UK relative to the US. It probably won't come as a surprise that typically the UK trades at a discount, if that's the right expression, to the US. So if you have two assets that are broadly similar, but one is UK focused and one is US focused, you tend to see higher multiples for the US focused business. So if we look across the TMT sector, multiples actually improved year on year. So this is looking at, if you look at the left-hand side, that's the TMT, that's all companies globally in the TMT sector. These are revenue multiples. So the revenue multiple moved from 2.4x in 2024 to 2.7x in 2025. Now, if you strip out the UK or you just look at the UK there, multiples were up from 2.2 to 2.4 times revenues. And then if you look at the US, you can see the premium there. And actually, it was a very strong year in the US in terms of multiple expansion. So multiples went up. The median revenue multiple moved from 2.7 times to 3.6 times in the US. If we now look at this, let me just move on here. If we now look at EBITDA multiples, the reason I looked at revenue multiples as well, obviously traditionally revenue has been a good measure, a common measure of valuation for tech companies, particularly SaaS companies. But if we now look at EBITDA multiples, similar story. So we saw nice expansion in multiples in 2025 versus 2024. You'll see in terms of our entire universe, multiples moved up from 11.5 times to 13.1 times. In the UK alone, moved from 10.8 to 12.6, and then in the US, 13.7 up to 15.8. So actually a pretty positive picture in terms of valuations for tech companies in 2025 versus 2024. The other interesting thing, I think, is to look at the TMT sector in terms of what private equity is paying versus strategic buyers. This is quite surprising to me, actually. Normally, you would expect strategic buyers to be paying a premium to private equity because they can get synergies and so on. That hasn't been the case when we look at US and UK TMT deals over the last few years. Actually, it's been private equity that has been paying a premium. And I think that really speaks to the fact there's a lot of private equity money chasing high quality assets. And well, up until recently, which we'll come on to, software assets have been deemed to be very high quality, so popular with private equity. If we do a deep dive into SaaS in particular, so if you think back to my first slide, which showed the different constituents of the TMT sector within the T technology, SaaS is really the most important constituent. So just do a deep dive into there. This is looking at, as well as looking at sectors to determine how multiples are trending, it's really useful, I think, to look at size bands as well. So we have these different indices that put companies into different buckets based on how big they are. So the nanocap bucket on the left-hand side, for example, was 1.2 times, was the median revenue multiple. And then you can see that moves microcap 2.2, small cap 3.4. The bandings, just to give you a feel for this, our nanocap banding is sub £2.5 million deals, very small deals. Microcap 2.5 to 10, small 10 to 50, mid 50, large 250 to a billion, mega billion plus. But this is a theme that a lot of investors are playing at the moment in buy and build. So the idea is that I can buy assets, small assets for 1-2 times revenue, and I can build a big group and I can sell that group on a much higher multiple. And this is a perfect example of it. This is a company called IdeaGen. It was a listed business. It delisted. The exit multiple was 11.8 times revenue. They did a total of 46 deals between £700,000 and 150 million. Median deal size was 8 million. The median revenue size, a multiple that they paid, was 3 times. So you can see the impact of that. If you pay a median revenue multiple of 3 times and then you sell for 11.8 times, you get that great uplift. So that's 2025 versus 2024. We have a few months to look at in 2026, and the picture has been interesting and I think confusing in equal measure. So this is the S&P 500. This is a 10-year chart of the S&P 500. I think when I look at this, I just look at the resilience of the markets. And we've had sell-offs before. If you look through this chart, we've had the COVID market sell-off. We've had 2021 rebound from massive stimulus. Markets coming off a bit in 2022, which is when interest rates started moving up. We had cooling inflation 2023 helping. Then we had 2025 Q1. You can see a sell-off there, which was the tariffs. And then you see a sell-off in at the beginning of 2026, which is the SaaSpocalypse.
So that's the market context, and Doug's just landed on a term you'll be hearing more of, the SaaSpocalypse. In part two, he unpacks what it actually means, which software businesses are most exposed and which might benefit, and also how it's already showing up in valuations. So part two is next in the playlist.